if you're a business person and you don't adopt these policies, then you are making yourself a target for fraudsters. Like 100%, that's what you are doing. Because the fraudsters will go to the weakest link in the chain, and that's where they will penetrate. So if you don't adopt these kind of protocols, you are waving a flag out there, because that's what the fraudsters are doing literally.
Because the management and transparency is what's very important. So once you submit a referral, you're going to have your own Home Advantage account, and it's going to tell you where everything sits. So if you have 10 referrals that you've sent into the network, it's going to give you all 10 referrals. It's going to tell you every milestone that that client is sitting in, whether they're touring homes, whether they're in escrow. And you now can manage through the Home Advantage application as far as what your pipeline looks like for the referrals that you've sent. And so it's pretty sophisticated, and it's all click of a button, guys.
Good afternoon and welcome back. I think it's been a hot minute since we've had our good friends here at from Consortia join us, and we're going to go slightly. Well, actually, no, we're going to stay very much on direction today, but there's a lot of news. There's a lot of updated things happening, specifically with FedNow. And so I'm obviously going to ask some good questions today, but we really need, I think those of you joining us today, you're here for a reason. You're here because you're interested in this talk and how it's going to affect real estate. And there are some things happening, specifically how FedNow is, revolutionizing how real estate transactions are going to take place, and how the new payment rails will speed up closings, reduce costs for affiliated title, settlement and lending operations, and just really affect transaction safety. So ladies, welcome back. Good to see you. Where are we going today?
Great to see you, Jeff. Hi, Sheila. Hi, everybody out there. So I think today we want to talk about the changes with payments, because some things have gone out to market and are getting tested out there. So we would love to bring everyone up to speed on that. And potentially answer any questions from the audience as much as we can.
Perfect. Sheila, anything to add?
No, excited to update everybody. It's getting fun.
Well, okay, so let's get right into that. It's getting fun. I just mentioned the speed, the safety, the efficiency. Can you add a little bit more color to this?
Yeah, so FedNow is the biggest update to our banking system in the last 50 years. The last big change that existed in the payment rail space was the rollout of ACH, which I think happened in the 70s. So it's been 50 years, and this is to expedite the transfer of money between financial institutions, which are called FIs. If you guys hear me use that like slang, it's called FIs for financial institution. So the way that I like thinking about it, the easiest way is Venmo, how we transfer money between parties like Venmo, PayPal, Zelle. We've all voted with our money, and we've said as consumers, hey, we really like this convenience factor of being able to pay our friends and family, and sometimes people who work for us, right? In the gig economy, we're used to paying money instantly. And so this is happening now at scale between financial institutions, so that we can settle trades and transfers faster.
So speed, but there's also safety. There's also efficiency. Tell me more.
Absolutely. So let's focus on the real estate space. We've all been in transactions, right? Where we're calling title, we're calling escrow, we're calling the lender and saying, hey, did the wire hit? Are we going to make it to cutoff? Are we going to be able, for the West Coast, right? Wires cut off at 1, and then we have to go to the county recorder's office. County recorder's offices, sometimes they only take 5 closings a day. So if your wire comes in late, you're pushed to the next day. If that happens on a Friday, for example, you're not closing until Monday, and you've got the family in the U-Haul out there with no place to live on a Friday afternoon. And then they have to take off work in the following week to move into their house. We hate that experience for our customers. We're never going to get a referral back from that customer because of that horrible closing experience. So with the FedNow product, we're able to fund that closing and then get to the closing finish line faster. It's also more secure because of some of the guardrails and business partners who are coming onto the system.
And you obviously, I mentioned FedNow, and the Federal Reserve is a big part of this. That has been a progression from where we've been, right? And so, what I guess why is this happening? And how fast can we expect this as a real estate industry to expect this to hit our industry and start affecting us to where we need to be privy to what's happening?
Yeah. So what I didn't understand until probably like the last 45 days ago, maybe I finally fully understood this. And this is after we've flown out to the Federal Reserve and met with them in person. I didn't realize, and I'm a turtle, takes me a few times to hear something, that this was actually created to make the small and medium-sized banks more competitive with the big banks. There's been like a lot of noise out there. We've seen a lot of changes, right? Like there's been a lot of activity, and I'm in the San Francisco Bay Area, and we've seen 2 banks go belly up earlier this year. And so I didn't realize that this FedNow product was actually to help those small and medium-sized banks be more competitive. I think there's a lot of noise that's out there. So when I finally got my arms around that, I was like, whoa, that's actually really pretty cool that the Federal Reserve listened to their clients. Think of it as like those banks, all the banks in the ecosystem are the clients of the Federal Reserve. Kind of cool when you start thinking about it as like from a business point of view. So they actually did this to foster community and regional banking, which I don't think gets enough attention. So I want to put a finer point on that. And then I would say for the real estate ecosystem, what we help the Fed understand, what does a transaction look like? And so the place that they wanted to roll out FedNow was first on funding home refinances, which, as we know, there aren't a ton of those happening right now because interest rates are high. But they did want to try and break the system because they're just trying out these new rails between 2 financial institutions so that it's not consumer money that was on the line, that it was money being transferred between banks. So that was pretty cool that they put the safeguards on themselves. Okay, where's the safest place to roll this out? Well, it's bank to bank transactions, because then they can always go and find the money. I know that sounds funny and kind of weird to say, but they want to make sure that those rails are accurately talking with each other. So that's how this is rolled out from inception to hitting the real estate space so far.
So the effect specifically, so obviously our audience is going to be real estate agents, real estate professionals in general. How is this going to affect them? Is it going to affect them on a transactional basis, or the real estate agent specifically, or is this more of on a higher level between the banks, title, et cetera?
So this is going to impact the agent. So what's really cool is that if you want this turned on as a consumer, as a real estate brokerage, and Sheila told me this on Wednesday morning before going on stage, she told me that the human has to approve this level in their bank account. This kind of money transfer system happens. So Jeff, if we're in a transaction, we're all moving money between us. Jeff, you would have to go log in and say, I approve using FedNow. Sheila would, I would. So every party here would have to go and approve that. What's cool, and I don't brag often, but we're pretty proud of this one. We got a business partner of ours approved with the Federal Reserve to be a service provider of this system, to be able to move not just the earnest money deposits, but the cash to close, and then all the commissions, all the county recording fees, all the taxes. So that company is called Payments, with a mint, right? I'm gonna have a piece of minty gum or an Altoid. So payments.io. They're the only company in this space approved by the federal government to be able to move money securely. So I would check them out. Consortia is working with them. Our job is to explain to the whole industry, whether it be NAR or through our own training course. You guys know that we did a blockchain trading course. So we're going to do one for the Federal Reserve just to explain this whole process. And I think payments is really a big part of it, because payments is that intermediary that works between the financial institution and Jeff's mortgage company and Sheila's title company. So you need like a place where everyone logs in that closes the loop. And by closing the loop on this and creating a system where everyone's bank accounts talk to each other, you're eliminating wire fraud, which is huge. In 2020, wire fraud ballooned up to $1 billion problem. So we're creating a better experience for the customer at the end of the day using this new payment rail.
So now, as we discuss this today, correct me if I'm wrong, but what you're describing is like the mode of exchange. We're not talking about currency. We're talking about just the exchange of dollars.
Yeah, I'll jump in here if it's okay, Teresa. So a lot of people were scared when they heard the Fed was releasing the Fed Now, because they thought that the Fed would be taking over their bank accounts and see all their money and all that stuff. That's not at all what's happening. So number one, the Fed already has all of the banks online using their products. They move, what was it, Teresa? How many billions of transactions per day through the Fed right now? So it's like $1 trillion a day or something
I
crazy.
think it's like 3 to 6 trillion a day.
Yeah, it's insane. The amount of money that they move every day already through all the banks across all of America, because they are ACH. The Fed is ACH. You know, they call it ACH, but that is a Fed product. So the Fed is already moving all of this money through the banking system. So it's no different. This is just another product offering. So your bank, everything's going to operate the same on your side as a consumer. No one's going to have access to your bank account beyond who currently has it. And what you're going to do is they'll have a way for you, like Teresa talked about, clicking on. So remember when you first saw Zelle as an option in your bank account, and you had to sign up for the service. You had to fill out a little something that said you wanted to be able to Zelle money from your account. This is the exact same thing. So now you're going to have an option to send on the Fed rails, which should be less expensive. It's immediate because it's a bank-to-bank immediate transfer. So no, cuts down wire fraud, more security, faster, and less expensive. It should be less expensive than the other alternatives that we're currently using for like ACH wires. So for us as agents and for our consumers, letting them know that the only thing they'll have to do, there are currently 50 banks live since July that are operating with the Fed Now. They're bringing on, there's 10,000 banks or 9,000 banks they have to bring on board. So it's going to take them a hot minute to get them all on board. So what we're going to be doing with payments as a test is making sure that two parties both have banks that are already pre-approved with Fed Now, that they both will have to accept for their money to move or be received through Fed Now. And then payments would be the intermediary for us to be able to do the transaction when we work on doing the pilot with them. Because it is, you as a consumer have your privacy with your bank that you're then going to have to accept to be able to do Fed Now payments. So that's how it's going to work from a consumer facing within the bank. And then on the payment side, if you think about the money that moves in a transaction, most people usually just think about the closing money or the money to pay the house off. But you have option money, earnest money, closing money, commissions. You have all the payments to all of the providers, whether it's the mortgage company, the HOA, the utility companies, at liens or encumbrances, the taxes. You have a lot of money moving from the title or the lawyer's office who's closing the transaction post-closing as well as pre-closing. So payments has the ability to move all that money through their system, all on the Fed rail, as long as all of those parties have clicked with their bank that they're willing to accept FedNow payments. So that's ultimately where it will get to. It won't start out that way out of the gate, only because each person's bank or each company's bank has to be FedNow ready, and they have to accept as the company or individual that they're willing to do FedNow payments.
So payments is a separate entity that just helps facilitate it, the FedNow transactions. Is that correct?
Correct.
Yeah.
And payments is the only currently existing outlet.
Yeah, payments is the only service provider. So you've got consumers with bank accounts and businesses with bank accounts. You've got financial institutions. So the Fed works directly with the financial institutions over here. In order to be able to connect the two, there has to be a service provider, and that's payments sitting right here. And it coordinates everybody. So Payments Bank is one of the first banks that's part of this first 50 that went to market with the FedNow protocol. So because their financial institution is dialed in, it can then talk to any other FI that's got FedNow turned on. And right now they're the only one in the real estate space. So we partnered with them. We know of a couple companies that handle some level of payments, but they're the ones that are the most inclusive of all the money that has to get dispersed, like Sheila was talking about.
What does all of any of this have to do with our blockchain conversations?
Nothing. Nothing.
Okay. Yeah.
I guess if we want to touch on that, right? Like the reason why Consortia got involved and asked and kicked down every door to get tight with the Fed and understand this is because we understand how hard it is to bring a new concept to market. Second reason is Consortia couldn't distance ourselves fast enough from crypto. And by aligning with the Federal Reserve, we saw that as a perfect way to make it really super clear that Consortia is not crypto. The Federal Reserve has done studies about blockchain. That's no secret. That was done about 3 years ago in conjunction with MIT. This project does not have to do with any kind of government Fed coin. It doesn't have to do with any kind of CBDC that's being rumored to be out there. And as we were told by the Fed, we were on stage with the Federal Reserve just last week. That is something that will have to be agreed upon by Congress. The Federal Reserve cannot unilaterally roll that out. So just to dispel any myths that are out there, that takes literally an act of Congress to pass that through.
So you made the comment that you couldn't have moved fast enough to distance yourself from crypto. I just asked the question about the connection to blockchain. There's also, I assume, no connection to digital currency here either.
Other than the test that they did with MIT for how this money would move potentially on blockchain rails, that's all they're willing to disclose at this time.
Yeah. And that was, you can look that up. That's public record. It was called the Hamilton.
Mm-hmm.
And people kept saying it was going to be the Hamilton coin, but that was just them trying to understand the space. That's it. Got
it. Now, we have talked about, and I've read about the U.S. being, late to the game. Is that true? How does that impact us?
So lots of other countries have turned on this form of digital payments, instant settlement payment systems. China's a big one. I think, what was Tim mentioning last week? Australia. Was India one of them?
India.
I think Brazil as well.
Brazil, yep.
It's funny that those make up the BRICS, but anyway, we're not talking about that.
Not Australia.
I don't know.
But not
Australia. Australia is not a part of the BRICS, yeah.
Yes. So, but a lot of them are much more progressive. And so we are behind on figuring out the new payment rails and rolling it out.
So does that impact our our country? Does that impact our economy? How does that impact us?
I think that everyone's trying to figure that out right now. There's a lot at play. In order to be a global leader in commerce, we have to be able to settle as fast as all of our counterparties that we're trading with. So absolutely, adopting a digital payment system that works globally is a competitive feature set for our US dollar.
So what is it that a real estate agent needs to be doing to prepare, embrace, accept? What should they be doing?
So watching this podcast, if that just fell on ears of realtors, I think that's a really good first step. And we're going to be working pretty quickly here to create the training to explain all of this with pretty pictures and workflows and how to get this all rolled out. So I think staying in lockstep with us as we bring this out to the real estate community is going to help realtors understand it. I think if you look back in 12, 18, 24 months, 3 years, right? You're going to look back and say, okay, the early adopters to this system are going to experience a much better client experience. And it doesn't cost you anything to do this. This is not like a cost above and beyond anything else that you're already doing. All you're doing is creating a more secure transaction for the consumer and just a better communication process of saying, hey, where's your money today in this transaction? Is it safe? So I think, we're going through lean times. On the lending side, we saw a lot of lenders not renew their licenses or loan officers. I think we're going to see some attrition in the real estate space. I think some people already are in their organizations, brokerages, and downlines. And I think that the winning ones are going to be ahead on really essential technology. We're seeing a lot of subscriptions for non-essential technologies really hammer some of these prop tech companies. A service like this is really essential to your business and something that you have to adopt. So I think that's what we're going to see over the next few months here is winning agents are going to do everything that it takes to create a better customer experience.
But how does the agent necessarily have any control over this? Is it about choosing to work with the right lenders that do embrace this? Is that where they can have some control here? I mean, where is it that they can, I guess, guide or navigate their consumers to having this experience if they're working, traditionally with a company that maybe hasn't embraced this yet?
So I think if you're an agent and you're listening to this podcast, I think it would be smart to move this one up the food chain, that saying manage up, give it to your broker, have a call with your title company and get this circulated and move forward. Because it starts either at the broker level or it starts at the title and escrow settlement level is really where this is going to get controlled. And then the lender can be brought onto this as well, or just mention it to everyone in your ecosystem. And if you're doing enough transactions and you've got a voice or your broker has that voice, get them involved in this conversation. Because again, it doesn't cost you anything and it's going to save everybody money on their E&O insurance claims. So why are people not going to want to do this?
Yeah. So this is like everything. It's all about consumption at this point. It's just staying hip to what's happening and not turning a blind eye to it. So what would be your advice to an agent? And I experience this even with my own company. Like when I'm saying, hey, I think we need to be paying attention to this, the reaction that I felt initially was just kind of like, we'll deal with it when we have to. It's just not priority. And I'm guessing there's probably going to be a fair amount of brokers that take the same approach, like, whatever, I'll figure it out later. It's over my head. How would you react to that? How would you advise someone to react to that?
Well, there was a company that we brought this to. We brought the Federal Reserve to this company and they were like, we don't think the Federal Reserve is a real thing. And I was like, okay, great. We moved forward with another company and we left them in the dust, politely speaking. And these are friends. I mean, what can you do? These are, These are friends. And if they don't want to come along, they are going to get left in the dust.
I think of it from a service perspective, that if someone cares about their business, if someone cares about the consumer and being excellent at what they do, they're absolutely going to want to do this, because as Teresa mentioned in the very beginning, is $1 billion in fraud. So if you haven't been caught in fraud or your clients haven't been caught in fraud, you will have someone that gets all of their money stolen because they're not sending the money securely through a path that helps secure the funds. I mean, Teresa can tell you a story. I was on a meeting this morning with a number of my agents in my group, and we were talking about fraud, and they all started chiming up saying, I just had that happen to me. I had my client's house stolen, or I had my client's money stolen. So fraud is a really big deal, a really big issue, and our industry is getting bigger all the time. Someone told me today that there's a bunch of houses being stolen in Dallas. We know there's a lot of land fraud. We've had famous people. We were told famous people have had their houses try to be stolen. So fraud is a huge issue in our industry. FedNow fixes that. And one of the things Teresa and I are doing is helping fix fraud as well, verifying the actual person is who they say they are based on the government, matching it against the government database. So there's just a lot of things like that we've been working on to, I mean, how horrible is it for you as an agent to do all that work, take someone out, find them a home, get down to the wire where you're going to closing, and then they have all of their money stolen in the transfer of the wire to the title company. How horrible is that? And it happens all the time. We just don't talk about it. So if you care about the industry, care about your clients, care about your brokerage, you're going to want to do this, because this will be, as of to date, the most secure way to send money. It will be the most secure way, because the way they described it to us is it's bank to bank direct. There is no, it's literally like transferring it on a ledger. Like this bank over here makes a note that money is now transferred to this other bank. So it will be the most secure way to send funds for your clients. And that's huge for us as an industry, huge for us to protect consumers. So I would think everybody would want to do this.
Yeah. So this is obviously going to go. I mean, I assume. I guess I shouldn't say this is. I assume that this is going to go pretty big in the real estate tech space. Are there other companies that are kind of lining up or prepping for this? And how do you decide who to use, who not to use, that sort of thing? Payments is the only one that currently exists. How do you foresee that going?
We don't know of any other companies that have a system that's as robust as payments, that handles all of the sides of the transaction. Will there be copycats? Yeah, people pile on when they see a good idea. So maybe somebody builds that. I think payments has figured out a lot of the nuances, and they're completely national. They figured out all the state laws. I mean, their background is lending. That's where they came from real estate and lending.
And title. One of the brothers owned a huge mortgage business and sold it, and the other owned a huge title company. So they totally integrated into the space.
Yeah, they're just the nicest people. Hopefully, we can bring them on in another podcast. Sorry guys, I had a brain fart. I didn't bring them on in good time. So another time, they can explain it in granular detail about how it all works. They're just the nicest people in the world. We're just so happy. Sometimes you're able to make good things happen for good people, and we were just so happy to get them pushed through with the Fed.
What percentage of banks have to adopt this before it becomes mainstream?
So I think what did Tim say last week? He had a really good response to that. for what percentage. I think it's just as we go, it's going to really snowball. It's going to have a snowball effect. As you get a few of the big ones on, the next ones they'll just start clicking on, and it'll start to snowball.
And this will become the only way to do it, I assume, at some point. Is that what the writing is on the wall?
I think so. Our lobbyist in Capitol Hill has a great way of explaining it. He says it's like building a new bridge. You keep the old one up, and then you launch the new one, and people start going on the new one. You test it, people start going. Sometimes you keep the old rails, the old bridge there, and people can choose, or you can direct traffic on both of them. But eventually, that one gets taken down. I don't know in this case if the old bridge is ever going to get fully taken down. I think they'll exist for backup payment rails if needed. But I think the FedNow protocol is just going to be so fast and so efficient.
Why would you?
Why would you? Like, why would you send a wire for your closing funds where the wire can be compromised? You're sending wire numbers. Why would you do it when it's more expensive than FedNow? Even with payments layered on top, it's going to be more expensive, and it takes longer. And the longer a money transference takes, and the more time something can be lost in transit, the risk of not being able to find that money once it's left goes up. So you want to be able to see where something went instantly to know if there was an issue, catch it, right? Like if I don't know who has a teenager or remembers being a teenager, right? Every minute that goes by where you don't know where your kid is, like the parent gets angrier, right? Like more risk happens, right? When you're not home at a certain time. And the same idea with your payment. The longer that's kind of lingering out there, the more dangerous things can become.
I saw Tristan shared a nostalgic video the other day about they were at a Burger King, and this is, I don't know, 30 years ago or something like that, where they had just introduced the payment of using credit cards at a Burger King. And they were interviewing consumers, asking them what they thought of it. And people were like, well, this is really stupid. If you can't afford a $3 burger, you shouldn't be blah, 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 blah. It was just interesting to watch it because it just brings to light like the whole, like, look at that now. I mean, as you mentioned, this may not ever, it may not, the old way, the current way may not ever just completely go away, just like cash has essentially been, not phased out, but it's probably less than 10% of money exchange anymore. And so I think this is a good way. That's a good way to look at this, especially for all of us in our industry, because we are typically, just as humans, we're so slow to react and embrace things. And I think we need to learn from our past, and that you can continue to fight the evolution of technology and where things are going, but your dislike for it isn't going to stop it. Just like it didn't the radio, and then the television, and then, car phones that turned into cell phones, and beepers that don't exist anymore. All these things, it's just the way it's going. And I don't know if there's a better way to maybe get somebody to wrap their head around that and say, okay, I am going to pay attention to this. What happens to the people that are slow to react? What happens to, what is your opinion of that?
Well, I think that the risk for those deals, so if a company does not take on this protocol, right? Like, and what we're seeing this in some other areas where fraud exists, where Consortia really is reg tech. That's what we do. Like there's, as my friend Alex Lang says,
reg tech.
Yeah. So regulation technology. He says, well, he has a funny way of saying it, but someone who dresses like me is talking about the most boring thing in the world, right? Like there's a dichotomy that's here. Nothing that Consortia does is sexy. You don't like jump out of bed and be like, ooh, I'm so turned on by this Consortia idea, right? Like, no, we're just helping good friends like not get hurt by fraud. And so what we're seeing in other areas where fraud exists and where we're helping our friends minimize that fraud is if you're a business person and you don't adopt these policies, then you are making yourself a target for fraudsters. Like 100%, that's what you are doing. Because the fraudsters will go to the weakest link in the chain, and that's where they will penetrate. So if you don't adopt these kind of protocols, you are waving a flag out there, because that's what the fraudsters are doing. Literally, my firm got hit with fraud because these fraudsters knew not that my firm look, they just knew where in the transaction to target. Let's just say that.
It's happened everywhere. It's happened everywhere.
Mhm.
Exactly. And they're figuring out, and they will bounce from firm to firm to firm. And all the top brokers, Sheila and I talk to all the top brokers in the country on a regular basis. And associations, let's also say that. So some of the largest associations in the country, they've literally said that when they institute a protocol, then the fraudsters move on to the next weakest area where they don't have this. So if you're a practitioner and you're like, I don't care about this, congratulations. Like, you are begging for issues to hit your grid. You are begging for a headache. You're not going to address it today because it's too much effort, right? It's going to burn too many brain cells. Okay, great. It's a problem for tomorrow. There's no outrunning the amount of fraud that's out there.
Is it just irony that you chose the colors black and white for the Consortia logo and not being sexy? Is there a correlation there?
It's absolutely like, yeah, it's like a strong sign of Asperger's. It 100% is. Like, I see the world in black and white. And you know what's worse is my teenage son sees the world in black and white. And if you don't fall within, like, if you're not following the rules, like, and you're a hypocrite in any form of I think most teenagers are like this. Like, it is scorched earth. Like, I guess he was talking to a cop for 30 minutes yesterday, and he pulled out every fallacy in the cop's like lexicon. And he was like, just, I don't know where he gets this, but he just looked at the cop and just blinked. Like, really? Like, it's like he's my spitting image. And I'm like, oh my gosh, I have no idea where you got this. But yeah, black and white.
That's funny. So a last question, really just specifically to real estate agents, is obviously there's I don't know if urgency is the right word, but it's very important, obviously. And as we talk about, fraud, I think the average real estate agent, loan officer, by and large, has not personally experienced this. So even though we all have heard about it, we've all hear it, we get emails, you see title companies, in their email signatures say it, right? And they talk about this and how it's impacted them. But is there another way to really get through to someone who probably is thinking to themselves, well, this doesn't really impact me. This doesn't affect me. Other than if it did happen, it might blow up a transaction, but it doesn't, it probably hasn't impacted a lot of individuals, even though it's happened a lot. There's a lot of real estate professionals. So is there any other thing that you would say to anyone watching or listening to this to really emphasize the importance? The way I think of this, everything that you describe is, I'm going to use this to market myself. This is how I'm going to use this. It's become another marketing tool for myself, because of course that's how my brain goes. But is there another way outside of that, by saying, by using this as a tool to say, you're going to be safer with me? Is there any other way that you would articulate it or share?
So the top referral network in this country is focusing on, of all the leads that they are generating, 80% of those are listing leads. In an economy like this, you must have listings in order to last. You list to live, list to last. So this is a quiver for those top agents and brokers who want to get listings. You say, my brokerage is the most secure in this zip code. We are the only firm that's rolling out wire fraud prevention, title fraud prevention. That is going to help you get listings. 100%. Like, the top real estate brokerages in the country are figuring that out. If you want listings, that's how you position yourself.
I don't know if it could have, I didn't expect that answer. That was a great answer. Sheila, anything to add?
It's interesting. Teresa and I did a few shows recently and posts, and we have gotten some pretty outrageous comments and feedback to those posts, which in some ways is shocking, because you're like, do you not hear what we're saying? Are you not listening to what we're talking about?
Can you give an example of the post and then the response?
Okay. So one of the posts, Teresa was explaining, one of the products that we have is to help prevent fraud. So most people in the real estate industry do not realize that when a title company or law firm, if you're in a lawyer state, when they make a copy of the driver's license for the person selling the property, they don't double check that driver's license against the government database. So there's no way that they actually prove that that person owns that property. Now, with people who have mortgages, obviously a mortgage has to be paid off. So it's a little different with that. And there's different ways people can create fraud around mortgaged properties. But this is what happened to Teresa. Someone took the name of the person that was the seller, made a government ID with their photo, with the data from this actual owner of the property, presented themselves as the owner, got a listing agent to list the property, thinking they were the owner. Teresa's buyer purchased the property. It wasn't until after the property closed that the real owner went to the county to pay their taxes, that it was discovered that the property was stolen. So that's why I'm saying this is not a little issue. So if you don't have a way to check their ID against an actual government database, which as far as we know, we have not met anyone yet in the industry that does it besides us. We're not only checking their ID against the government database, we're doing a biofacial scan of them to match up to prove who that person is, who they say they are. And then we can check their property records in some of our products. Because how do you know that person is who they're saying they are? Truthfully. I mean, that's how crazy this has gotten. And it can happen on land. It can happen on houses. I used to have it a lot in the foreclosure industry where homes were vacant. People would stick a sign in the yard and sell it. They didn't own it. So, I mean, just all sorts of crazy things happen when it comes to fraud that people operating on a day-to-day basis don't think about. But the $1 billion of people's money that has been stolen, they're thinking about it. Guarantee you all those people are thinking about it.
So in a case like you described, I assume the buyer is screwed. The phantom seller ran away with the money.
Yep.
The current homeowner retains the home. They just have an extra little headache on their hands.
Well, the title company in that case winds up getting sued because they sold the property, because they didn't do a government verified check on who the seller was.
Sued by the buyer who thought they were buying it. And now they want to be reimbursed and probably damages.
Of course. So even if the agent's not feeling it, I guarantee you the title people are feeling it. Guarantee you the law firms are feeling it in the lawyer states. Yeah. So those people are the ones paying the claims to clear things when all this fraud's happening. Now, could that agent be sued? Could that brokerage be sued? Absolutely, they could be sued. So I don't know how many of those lawsuits have happened, but we know an agent listed a home for someone really famous in a state recently in the last 2 months. And that was not the seller. And somehow the seller found out and went to the government and the AG, and it went all the way up the chain to the general counsel for that state. It blew up that state. So they're very aware of fraud in that state, and they had a conversation with us because of it. So it is a much bigger deal than people want to think about. But the truth is, if you're working with people who are working to prevent it, like us, and with the Fed now, and with payments, with what the three of us are doing together, you can protect yourself. You can protect your clients. Why would you not want to do that? Why would you not want to do everything you can to protect people?
Yeah.
I'll say that some agents, I think it's a numbers game. It's a law of large numbers. If you're doing enough business, you're seeing these cases happen within your brokerage or your book of business.
Yeah.
So if you're not doing a ton of volume, the odds are you're not going to see it. But if you're covering a lot, like Sheila had 10 people on her phone call today who were talking about housing fraud. I've seen it in my own firm with my own deal. And I'm not bragging that I'm big because I'm not that big, actually. But when you have legal responsibility and you have a team with you, someone in your team is going to be touched by this. That means not just your team member, but an actual human, a consumer. So, you know, you can't take down a negative review on Google or on Yelp. Trust me, I know. Like, do you want to be that firm that's like, oh, fraud went, let's say you don't get the lawsuit, right? How do you undo there was fraud working with this real estate brokerage? Like,
Yeah.
So just be careful out there, right? Sell and sell well. That's what I would say.
How do agents work closer with Consortia?
Jeff, God bless you. You're so great. So we'll be rolling out this training. We'll make sure that we put it through your network as soon as we have this ready to go. Payments, we just got them approved Tuesday morning of last week, and we were on stage with the Fed Wednesday. So we're just playing catch up, playing like treading water. So we'll get that information lined up, and hopefully in the next 30 days, we have something to show the industry for that.
So where will they find that? I mean, obviously we'll put it out, but let's just say they want to be proactive on their own. Where would they find it?
Well, if there was somebody like on top of her game, she'd put it on the Consortia website at reconsortia.com. So thanks for
Calling that out?
Yeah, thanks, buddy.
You don't have anything else on your plate. Come on. Awesome. Anything else to share before we wrap up here? reconsortia.com, of course, is the place you need to go. If somebody wants to, connect with you guys offline, is that the place to do it, or is there another place they can connect with you?
I'm a big fan of Facebook. Follow us on Facebook or LinkedIn. Send us a message. Yeah.
The two black and white social media apps. Just kidding. It makes sense.
Hey, our site is actually like deep purple. It's not black.
I like how you said, is that X? No, there's more juiciness on X than any platform if you want to get technical. Look who owns it. Awesome. Ladies, as always, it's a pleasure. It's interesting how this has evolved and continues to evolve. And for those of you paying attention, I applaud you. We applaud you. Keep paying attention. This is getting interesting and it's getting real. So it was Christine. It was, there you go. reconsortia.com. Very good. Well, thank you, ladies, for being on today. Thank you for those in attendance, those on the Facebook side of things. We'll be back probably next month, hopefully, and we'll continue to chat through this. And who knows what the hell we're going to be talking about next month, because every month it's something different. So thank you, ladies.
Thank you.
Jeff. Thank you, Jay. Thanks, guys.
Bye.
Bye.